How much life insurance do you actually need? Well, there are an abundance of calculators on the internet. All you have to do is search life insurance calculator, and there you go. But all of that can be confusing. So we're going to try to clear that mystery up on today's video. Hey folks, Jack Wingate here, and on this channel, we help individuals, families, and businesses save money on their insurance, help you understand insurance a little bit better, and let you know what's going on in the insurance industry. And determining just how much life insurance coverage you need can be mind-boggling, but it doesn't have to be. Before we get into the different methods and the different experts and what they have to say, let's start with this. Whether or not you have $10,000 or $10 million worth of life insurance, the first step is making sure that you have some. So instead of getting all caught up in how much you need, let's just make sure that you know that you do need some and you need to get it now. So having said that, today we're going to look at three experts in the financial field. We're going to look at Clark Howard, well-known radio expert. We're going to look at Suze Orman and what she has to say about it. And then we're going to end with the experts, with the man himself, Dave Ramsey, and let you know what he advises. And then we're going to let you know what our take is on how much insurance you actually need. All right, so starting with Clark Howard. Clark Howard has a well-known and respected radio show. He has a podcast, a TV show, you name it. Clark Howard has a lot of people that listen to him. And here's how he goes about saying you need to determine your life insurance. So you would take your family's monthly expenses. You would reduce that number by your spouse, if you have one, your spouse's monthly income, then annualize it and divide by 4%. That's going to give you a number. Now, where does the 4% come from? The 4% is saying that you could take this pool of money that you've just, come up with, and if you put it in an investment vehicle, you could earn risk-free-ish 4%. That way, your family could have that income drawing 4% interest every year to offset your income. Once you have that number, which that number will actually be fairly large, depending upon how much money you make. After that, you're gonna add your debts, so mortgage, credit card, vehicles, what have you, and that is going to give you how much life insurance you actually need. So they're taking one component of replacing your income. He does that by using a 4% factor. And then he adds on any debts, and that is the total amount of life insurance that you need. So that is the Clark Howard methodology. Now, the pros, I think it does a really good job of coming up with an actual amount that you need. It takes into account how much income is being lost, takes into account getting rid of debts. So really good. The downside, it's a little complicated for most people, although it's just a few calculations. Anytime you have to think a little bit down the line, to me, it becomes a little complicated. So we want something that's straightforward. So that's where Clark Howard's method kind of falls off the tracks for me, but good method nonetheless. Suze Orman. Now, Suze, like Clark Howard, has a large viewership on national television. She has a radio show, so a lot of people listen and go to Suze for financial advice. So here's what Suze suggests when it comes to life insurance. Suze suggests starting at 25 times your annual income. So you take your annual income, multiply that by 25, and there you go. Now, the good thing about Suze's method is this. One, it does do a great job of making sure you have a lot of life insurance coverage. Second good thing, this is a really easy calculation. It's just two numbers and a multiplication. The bad number that you get out of this is that the number you're going to get is going to be large. And sometimes people will get put off by that, thinking, oh, this is just someone that's trying to oversell us life insurance. So the good, it's really easy to come up with a value. The downside, it does give you a large number, so maybe some people are put off by that. The other thing that doesn't take into account is any debts that you might have. So, Clark Howard's methodology takes into account some debt, but doesn't give you a ton of years, and it's a little complicated. So overall, Suze does a good job. But again, pros, easy to calculate. Cons, doesn't take into account any debt. All right, Dave Ramsey. Dave Ramsey is maybe the most well-known financial advisor in the U.S. Has a large organization that puts out countless articles, how-tos on how to do whatever when it comes to finances. And in all disclosure, we are at ALLCHOICE a Dave Ramsey endorsed local provider, so we do believe in Dave's methodologies and his take on finances. But how does Dave go about telling you how much you need? Well, Dave goes about it this way. He says you should have 10 to 12 times your annual income as a life insurance factor. So you take your income, multiply it by 10 or 12, somewhere in that range, and that's going to come up with a number that you should have when it comes to life insurance. So, like Suze Orman's, the really good thing about this, the pro, is that it's super, super easy to come up with. The second thing, most of the time, the number that is going to come out of that multiplication is going to be something that you can wrap your head around, where Suze's is getting large with 25 times annual income. The downside is that Dave is assuming that you're going to be able to take those funds and earn somewhat risk-free 10% interest. That works well in most booming economies, but I don't know, a 10% rate of return can sometimes be a little daunting to get if you want to make it risk-free. So real easy with pro, 10 to 12 times, real easy. If you make $100,000 a year, you need $1 million to $1.2 million worth of life insurance. The downside, it doesn't take into account any debts, and it does assume that you're going to be able to earn a pretty decent rate of return to make sure your family can sustain their life throughout. So those are the pros and cons of Dave Ramsey's. But again, we believe wholeheartedly that Dave has a lot of great teachings, and this is one of them. All right, so we have looked at 3 key players in the finance world. We've looked at Clark Howard's methodology. We've looked at Suze Orman's, and then we've looked at Dave Ramsey's. So where do we at ALLCHOICE come down on this? Well, honestly, we still think there are a number of ways that you can calculate this. You can look at income replacement. You can look at wiping all the debts off. And we actually go through this with a lot of our clients, where we sit down and list out all the debts, make sure we get rid of it. Then we put a factor in and take into account income replacement. But if I were to tell someone, if they had a gun to my head and said, how much life insurance do I need? And I want it to be simple. Here's what I would say. Take your income today. Take that number out and figure out how long before you retire. So I'm 45 right now. If I want to retire at 65, that's 20 years. So I would need to take my income and multiply that by 20 years, and that would be the amount of life insurance that I should have to make sure that my family's protected. Again, that doesn't take into account all situations, but that's a real easy rule of thumb. If you're younger, you've got a long time to earn money, so your multiplier is going to be much larger. But then again, maybe your kids are younger. Maybe you don't have kids yet. Maybe you're going to have kids. You want to make sure that your family's protected. So the rule of thumb for us is take your income, multiply that by the number of years you have until retirement, and that is going to do wonders for most people. Now, that doesn't take into account people that need life insurance for estate planning. That's a different topic altogether. But again, that is a real simple method to go about determining how much life insurance that you need. And I can tell you this, you will never find a beneficiary on a life insurance policy that gets the check, that gets the proceeds once their family member has passed away. You will never have one say, this is too much money. So while we hear people joke, and I have friends that joke, well, I don't want my wife to have too much money with life insurance. That way I don't want her next husband living off of me. I know those things are said in jest, but at the same point in time, it's your responsibility to take care of your family, your spouse, and life insurance is the most cost-effective and efficient way to do it. And coming up with the amount of insurance that you need doesn't have to be complicated. We've given you a number of methods here today. And if there's anything else that we can do for you, please let us know. Until next time, we'll see you.